Hi everyone, Gary Colesill here, and we're in for a treat today. I've got Scott Rulon from Rulon Financial, and he's going to tell you how you can optimize your Social Security and plan carefully for it. So, without much further ado, I'm going to turn it over to Scott. So, Scott, the floor is yours. Take it away.
Thank you, Gary. And as you usually tell me, if you want to learn about Social Security today, you are in the right place. So my name is Scott Rulon. I've been a CPA in the state of Arizona and a financial advisor for just over 35 years now. So there's lots of different items regarding Social Security planning as it regards taxes, maximizing it. There's a few things that I haven't seen. So let's discuss a basic background today. And for those of you that want something extra, we can actually do a free report for you to tell you how you too can maximize your Social Security. So I want to thank you so much for attending this educational seminar about Social Security planning. For millions of Americans, Social Security is a piece of the retirement puzzle, an important source of retirement income. Today's program will help you learn more about Social Security so you can make the best decision for your family. We are hopeful you will benefit from our time together today. So you should know we are not affiliated with the U.S. government or the federal Medicare program. The information we'll discuss today is our current understanding and should not be considered as legal or tax advice. However, I am a CPA, and I would be happy to discuss with you any tax implications of your Social Security, because I am fully qualified to do that for the last 35 years. And no part of this presentation is intended to make an offer of sale or purchase of any specific security or insurance product. So what is Social Security? Where does it fit in your retirement plan? Do you want to understand your benefits and claiming options? What is the impact of work on benefits? And what are some claiming considerations regarding Medicare and taxes? Okay, let's get started. Hey, so everybody in their lifetime wants to get to that point in time where we can retire. And what that really means is I want to have passive income so I don't necessarily have to work anymore. So as the base of this pyramid, we have something called social insurance. And actually, the issue of social insurance even supersedes the United States. The first social insurance type claim was invented in Germany by Otto von Bismarck in 1877. So this is really not a new idea, but certainly social insurance or Social Security is the base of the triangle. On top of that are savings and insurance that can include annuities, life insurance, any type of other account you have, can include investments. And at the top, if you're lucky enough to have a rich uncle or aunt or mom and dad, maybe there's some legacy involved as well too. So your choice of when and how to file for benefits can have a significant impact on how much you get. So you will get this for lifetime income and your spouse will receive throughout your retirement. So Social Security is a very unique asset. It provides lifetime income. It provides COLA, cost of living adjustments. It provides spousal benefits, preferential tax treatment. If any of you were on one of our other webinars about annuities, you will understand that Social Security is only partially taxable and sometimes not taxable at all. And it's based on the full faith of the U.S. government. So a little bit about Social Security. Well, it was signed into law by President Roosevelt, also called FDR, on August 14th, 1935, and is financed through a dedicated payroll tax. So some of you may know that 7.64% of your paycheck comes out every time you get paid. What you may not know is there is a match provided for your employer for the exact amount you put in. So a full 15% of your paycheck goes into Social Security each and every time you get paid. The first retirement benefit of Social Security was $22.54 and was issued on January 31st, 1940. So an estimated 50 million Americans currently receive retirement benefits. These include retired workers, spouses, and other dependents. 97% of the elderly either receive or will receive Social Security. So that is just about everybody. Unfortunately, as a result of increasing life expectancies and changing demographics and economic blah, 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 Social Security may see some changes in order to maintain financial stability. So with no legislative changes, Social Security will run out of money in 2034. After 2034, anticipated revenue should cover about 77% of Social Security. In other words, something's got to change. That's what they're really saying. So where does Social Security fit? So at the bottom of the pyramid, we have Social Security. About 3 to 4% of you have an employer pension. Most of you probably have a 401k. Some of you have some personal savings. I will bet a lot of you work. So you have that thing called earned income. Others of you may have these things called annuities, savings accounts at insurance companies, or you may even have cash value life insurance. So Social Security was really designed for 40% of your income. Securing today and tomorrow. That is the motto of the Social Security Administration. So we're going to use an example here. So let's say you receive $2,000 a month. That's $24,000 annually, or $700,000 or more of accumulated benefits if you receive 288 payments to age 90. So determining the benefit amount, there's two main factors: your earnings history and the age when benefits begin. What you have to have is 40 credits or 10 years of work. So that means each year is worth 4 credits. And your primary insurance amount, also known as PIA, that's the amount you're going to receive, is the highest of 35 years of average indexed monthly earnings. So here's a little bit about what a Social Security statement looks like. And in fact, this would be a good time if you have a pen or pencil and a piece of paper to write down this website: https://www.ssa.gov/my-account. This is how you sign up for Social Security, and it is also how you see what your benefits are. Sometimes, believe it or not, Social Security does not send you an annual statement. If you don't get an annual statement, you should sign up on this website so you can see what your projected benefits are. So in Social Security, we have a concept we call full retirement age. So if you were born between 1943 and 1954, your full retirement age is 66, on down to if you were born in 1960 or later. Your full retirement age is 67. So that's when you get what your full Social Security is. So in 56, having 66 and 4 months, down to 67 at born 1967 or 1960 or later. So you can see here that you can take Social Security early. So if you take it between age 62 and 65, you'll receive somewhere around 75 to about 80% of your benefits. If you take it at full retirement age, you'll receive full benefits, or some of you may wish to delay and get some extra Social Security. So Social Security after age 67 goes up about 8% per year if you've not taken it yet, but you have to take it at age 70. So we've gone over early and delayed. So if you take it early, think of that as your basket of cash. If you delay it, you get a little bigger basket of cash. But what you are giving up is that early stream of payments you could have gotten before. So here's a break-even chart for Social Security. This is presented by a company called Covisium. There are many companies out there that have software that do this. And one of the interesting things that you can receive for watching this webinar is getting a report from us on how you can maximize your Social Security. So what happens if I continue to work? So earned income before your full retirement age is subject to an earnings test. What that really means is if you take your Social Security under the age of 66, you can only earn, I believe now, $60,875, or they will reduce your income. Good news, the earnings test does not apply after you receive your full retirement age. So any amounts withheld will be added back to your benefits after you reach full retirement age. So when's the best age to claim? So at this point, 3 primary factors: earnings history, election age, and life expectancy. So various other factors can include your health, marital status, your desire to continue working, and access to any other income if Social Security might be delayed. So lots of options when it comes to here. But I will say of all of them, Social Security all by itself is just not going to be enough. You really need to do something beyond Social Security. So if you take it before full retirement age, you can take it at age 62 if you're a worker. And if you're a surviving spouse, you can actually start it at age 60. So just know that your benefits are reduced, and they are reduced permanently. You will never get back what you would have gotten at full retirement age. And of course, Social Security is subject to an earnings test. So the FRA, the FRA, the full retirement age, workers receive full retirement benefits. And the earnings test no longer applies. So you can earn more than the $16,875 at that point. After FRA, worker benefits increase each year you delay past the FRA. So that's usually about 8% a year. You get these delayed income credits, and they end at age 70, so you have to apply for them. And the increase does not apply if you're getting spousal benefits. So what do I do claiming if I'm single? 2 basic options here: claim now or claim later. So what if you are spouse, divorced, or survivor? So general guidelines for spousal, they can get up to 50% of the working spouse's PIA. But they have to have been married at least 1 year. They have to be 62 or older, and they cannot file this until the working spouse actually files. If you are divorced, you can claim up to 50% of your ex-spouse's PIA as long as you are married 10 years or longer, you're 62 or more, you're currently unmarried. So just realize that even this 50%, that doesn't come from your ex-spouse's Social Security. This is just an additional benefit. So let's give you kind of a case study here. Jackie is not eligible for retirement benefits based on her work record. Steve's full-time amount that he would receive at retirement age is $2,400 per month. So Jackie is entitled to receive 50% of Steve's spousal benefit when Steve files. So the total household income from Social Security would be $43,200 per year. Not a bad deal. So if Jackie claims before for retirement age, her spousal benefits would be permanently reduced. So she would receive 37.5% of Steve's full retirement amount. Therefore, her spousal benefit would be smaller. If Jackie files at his full retirement age, her spousal benefits would be $1,200, which is 50% of Steve's retirement amount. If Jackie waited until after FRA to claim her spousal benefits would still be $1,200. Strongly suggest that Jackie would just want to file at her FRA. That's the right time to do it. So we've been through those. So eligibility, survivor benefits. So one survivor benefit that's not talked about here, if your spouse were to die, you will receive a whopping $255 in death benefit from the Social Security Administration. Pretty exciting, huh? So what are your eligibility? So it's available to widows, widowers, and surviving ex-spouses. You must have been married at least 9 months, except in the case of an accident. You must be 60 years or older, currently widowed or remarried after age 60, and remarriage after age 60 does not impact eligibility for survivor benefits. So survivor benefits are 100% of the deceased spouse's benefit amount. So it is entirely possible that if you are a spouse of somebody who died, your benefits will go up if your spouse was a good wage earner. So obviously, we know reduced benefits can be taken at age 60, 50 if you're disabled. Whoops. Subject to an earnings test if you're under the age of 65, and a dual eligible widow or widower can switch between worker and survivor benefits. So why wouldn't you want to pick out which one's better? That's what I would do. As a general rule, do not claim benefits early if you plan to keep working and are subject to the earnings test. Spousal election decisions can have a long-term impact on the amount of benefits received. In other words, look really carefully when you start to receive it, because if you start to get it early and you're a widower, you might not get as much as if you waited till retirement age. But I do realize that sometimes if the spouse was the sole breadwinner, you need to take it when you can get it. So we know that married couples should coordinate their claiming strategies and plan in terms of joint life expectancy. And today, a married couple, at least one of them has at least a 25% chance of living to age 95. When I saw that, that's just incredible. So delaying the spousal benefits of the higher earning spouse can help maximize the retirement benefit and the survivor benefit for both of you. Can you ever change your election? Actually, the Social Security Administration gives you one out. You can do that once, and you have to do it within the first 12 months. If you do get out before the first 12 months, you have to pay back what you took out. You are limited to one withdrawal per lifetime. Don't ever forget that. Very important. And the form you need to file if you're going to discontinue for a while, you must file form SSA 521. So you can, as always, get that at socialsecurity.gov. So what about taxation of Social Security benefits? So if your provisional income, or as we call it in tax world, your MAGI, modified adjusted gross income, is less than $25,000, or as a joint filer, less than $32,000, your Social Security is not taxable at all. That, by the way, is almost impossible to do today, but it's there. So if you're a single filer and your income's between 25 and 34,000, or a joint filer between 32 and 44,000, 50% of your Social Security benefits will go on the taxable line. If you earn more than 34,000 as a single and more than 44,000 as a joint filer, 85% of your Social Security benefits will be subject to tax. So here's how we calculate that. 1/2 your Social Security, add your wages, pensions, investment, interest, qualified plan, and IRA withdrawals, and non-taxable municipal bond interest. This is the only time that municipal bond interest can make something taxable, because in and of itself, muni interest is not taxable. So Medicare and Social Security. Medicare Part B premiums will automatically be deducted from your Social Security benefit. If you're one of those souls that makes a lot of money, guess what? You are subject to IRMA. IRMA is not your friend. IRMA means that they will raise your premium amount. Now, if it's just a one-time event, you need to file an SSA Form 44. Tell them it was a one-time event, so they will not permanently increase your Medicare benefits. Couple other types of people that will have Social Security reduced. Well, one of them is a government pension offset. So if you work for U.S. government, get a civil service pension, you will lose part of your Social Security benefits. But the big advantage here is you become a double dipper. The other one is called a windfall elimination provision. Where I've seen this apply most of the time, if you work for police or fire, many times you don't pay Social Security taxes. So this is called WEP, W-E-P. And so they can reduce your Social Security benefits down by 50% to a maximum of $447.50. So you still be a double dipper, but you'll get a little bit less. So how do I file for benefits? Get out your pencils. Here's the number, 800-772-1213. Or you could go visit your local Social Security office. You can also look online at www.ssa.gov. Or go in person to your local Social Security office. So one of the things that we offer here is a complimentary custom analysis of your Social Security. So what we will do, but you're going to have to talk to us to do this, because we're not just going to make it up and do it off the top of our head. You're going to have to meet with us in person or by phone, and we can run a Social Security maximization analysis for you to see what is the best way for your family. So in conclusion, Social Security is the foundation of a retirement income plan. Understanding your options and making informed decisions are critical to maximizing your benefits. And we would be happy to work with you to assess your personal situation. Thank you so much for attending. If you have any questions whatsoever, or you want a free, and I mean free, Social Security maximization analysis, please contact me at 602-824-2299 or email me at scott.rulon29@gmail.com. Or alternatively, Gary, you can contact Gary as well. Gary, you want to give out your email and your phone number?
Absolutely. Yes. Thanks, Scott. You can always call me on my toll-free number, which is 888-894-2929. Again, 888-894-2929. Or you can shoot me an email to Gary and the letter C. So that's Gary C at eliteprospeakers.com. If you have any questions at all, feel free to contact either of us anytime. Always happy to talk to you.
Absolutely, Dan. So I know you probably saw a fire hose worth of information here. Our goal here was just to give you some general ideas about how Social Security works, how you can maximize it. But obviously, each person, their decision is individual to them. And that's why we are so happy to run a free, that's without cost analysis for you and help come up with ideas about how you can live a successful retirement and maximize your Social Security. Thank you so much for tuning in. You can certainly tune in at other times, and we talk about other things like the Corporate Transparency Act. We can talk about maximizing your income in retirement, covering both your essential and non-essential retirement benefits. And we just talk about a variety of financial subjects. So tune in the future to learn some other things about Corporate Transparency Acts. If you want to watch Social Security again, learn about Social Security maximization, learn how you can enhance your income through fixed income strategies. So there's so much we have to teach you. It's not just about Social Security, but we look so forward to helping with you in the future. Thank you so much, Gary, for hosting.
Oh,
And I
my
look
pleasure.
forward to talking to you all in the future.
I have one quick thing to add, actually, Scott. If
Yeah.
anybody would like to subscribe to our series of, educational webinars on finance, uh, we'll be more than happy to send you an invitation each time we do a different topic. So if you'd like that, shoot an email over to me and I'll put you on the list. Again, Gary C at eliteprospeakers.com. And we'll sign you up. Doesn't mean you have to attend, but we'll send you out basically what we're doing every couple of weeks. Send you out the agenda for the educational webinars, and if there's something that you'd like to join us on, by all means. So if you'd like to do that, shoot me an email.
Yeah, in
Thank you
fact,
very much.
Gary, if there's a subject that they haven't seen or they want to know about financially, please have them suggest it to us. We will be glad to put together a presentation on that so you can learn anything you want to about financial planning and income.
Absolutely. Well, thank you very much, everyone. And if you need us at all, I think by now you know where to reach us. Thank you, Scott. That was very informative indeed.